Recently, at the IRLS conference in New York, we spoke with Paul Schultz. He is president of Aon Benfield Securities and speaks to the current trends in the ILS and CAT market and the evolving role of the broker in executing these deals. Here's what he had to say.
So 2014 was a big year for cat bonds and collateralized reinsurance opportunities. How do we think about 2015? So no question we anticipate a strong year again in 2015. We're off to a good start in terms of the level of activity in the market, sort of as expected, as the pipeline would sort of come out in the calendar that we know about. And so we're anticipating a very solid year this year. We had a couple of very large or very significant transactions last year, and those being billion-dollar types of transactions, either in one issuance or in two issuances. That's going to be very hard to sort of repeat in terms of the large deals. And so if we stay flat as an industry in 2015, we're going to view that as very significant growth, even though outstandings don't increase as much as they had the prior year. So the answer is yes, we anticipate a robust 2015. I think we're off to a good start as expected, and we'll see how the next several months develop. So we get the question about interest rates and the impact in ILS quite often. And where we are in terms of low interest rates, where we are in terms of compressed yield to investors or compressed return opportunities to investors really has enabled the growth of this market over the past several years. And in fact, I think the way we would characterize it in the market is we really saw a decoupling of the way that the industry prices itself a few years ago as we moved away from just staying parallel or flat with the way traditional markets price the risk to actually looking at the return expectations from investors and the types of returns that investors can achieve through alternative asset classes. And so now I'd say we're pricing off of a benchmark of what types of returns are available on an alternative basis for investors. And given where we are with the whole yield compression across all asset classes, I would say we're still in a very competitively priced market and would anticipate that for the foreseeable future. The question is how do we think about or how do we look at the pricing of different markets and the types of reinsurance coverages that are available for clients, whether that be traditional markets or ILS markets or other types of collateralized markets. And really, we as a firm, given where we sit in our advisor role to clients, really look at all of these different options for clients and quite frankly, are agnostic to the types of solutions we bring to our clients. So there are situations where one type of product, whether that be cat bonds or whether that be traditional pricing, clearly is at a better price point or more efficient price point for clients. There are other cases where the markets are, I'd say, priced the same or priced similarly, and then, depending on which market you're in, one might be priced not as well. So it really depends on the type of risk. It depends on where in the risk tower we're trying to achieve risk transfer for our clients. And as a result, I think we're really seeing the efficiency of markets competing against each other really benefit clients in terms of the types of options they have, the types of capacity they have, and ultimately what they're paying to achieve that risk transfer. So when we think about the market and how it's going to evolve over the next couple of years, obviously the influx or the continued flow of capital into both reinsurance markets and insurance markets is certainly going to shape the way that clients or way that markets compete for clients' business. And we're seeing consolidation in reinsurance markets. That's going to have an impact on how reinsurance markets use this capital. But what I would say is, rather than looking at the inflow of this capital from a defensive perspective or a threat perspective, we're now seeing the market sort of embrace the flow of this capital and try and use this capital for the benefit of creating new solutions for clients. And so I think we've moved from a defensive or a threat discussion to now where it's an opportunity discussion, and can we make the best from both markets, or can we combine the best of which each market has and really create new solutions and drive growth back into the market. So I think the market in general, and that would be underwriters, brokers, clients, are now really trying to say constructively, let's create a new solution. Let's create a solution that meets more of my needs as the client and lets the markets grow. And that's the kind of constructive dialogue we're in today. So the role of the broker is obviously going to evolve as the markets evolve. And so as we see consolidation, as we see new types of capital enter the market, the role of broker has to change. And the way I like to talk about it is that there is a distribution chain or distribution network where client cedes risk to primary insurance company, cedes risk to reinsurance company, and the reinsurance company hedges that risk through retrocession capacity. And capital is sort of provided along the way by different parties and largely through an intermediary. What is going to have to happen going forward is that the broker or the banker or the intermediary is going to have to prove value, and it's the same thing of the underwriter. Otherwise, we're going to see what some have been calling in the market as capital jumping the chain and capital going more directly to clients. And so I think the role of the broker or role of the intermediary there's never been a greater need to sort of match all of the interests together, but it clearly is changing, it clearly is evolving, and the broker has to be truly a trusted advisor to clients and be able to look across all different markets, all different products, all different capacity to give the clients the most flexibility that they can achieve in the marketplace.
If you'd like to see more of our coverage from SIFMA's ILRS conference, visit the RIN TV On Demand Library.